Welcome back. You are watching India Tonight, and I'm your host Sumit Chaturvedi. Nuvama just hosted the 20th India Conference, where theme was India Reformed, Resilient, and Resurgent, with 700 clients meeting 190 companies over 3 days. Well, it was the largest conference till date, and we have here with us MD and Head of Nuvama Institutional Equities, Shiv Diwan, to talk to us more about India's growth story and what is in store. Well, Mr. Diwan, recent macro news has been strong for India, with budget also, Delhi elections, and even a rate cut. Now, how do you see all that?
So yes, I mean, of course, after about 3 months of a little bit of negativity that was being spreading, there has been a little bit of a positive that has definitely shaped up. But having said that, given where valuations were, yes, we have corrected a little bit from there. But this year is poised to be a little bit more, unsteady because of the fact that these valuations have just gone completely out of whack. So there is some semblance coming back into the markets as we see it. There are large caps which will still probably do well, but you're seeing a little bit of money taken away from mid caps and small caps. This is largely true with two things. One, you've got constant FPI selling. We've seen almost 90,000 crores in the last 2 months that have been knocked off from the FPIs. And then there is also coupled with a little bit of AIF, PMS, and high net worth individual selling that we've seen. So to that extent, our sense is that this year will be more fundamental driven. It is a year where it's not like throwing darts where you could have made money in any name last year. This time around, it will be a little bit tougher to do that. So generating alpha is going to be tougher this year.
Well, global issues and macro uncertainty have been there as well. So how does it bode for the exporters, especially when it comes to a low rupee now?
See, I think the dollar has been constantly strengthening, and that has been, while it's been a concern for India on the whole in terms of investments, but that at some point will also sort of benefit exports as our product gets more exciting. And but let's face it that India has been a domestic consumption-driven economy, so the Indian markets are mostly dependent on that. And I think with what's happened in the recent budget, there is a lot more on offer for the middle class. And as a result of which we think that consumption will get spurred. On the export side, I think, let's see how things play out, what Trump does with his tariffs, and how things play out globally. But to my mind, I wouldn't be too disturbed about that. I would just focus on how consumption plays out in India, and that will anyways have a ripple effect as we go ahead.
Well, you did speak on the consumption economy for India being strong market. Now, which sectors are attractive in this consumption, Mr. Diwan?
So naturally, with in fact, at our flagship conference that we are in currently, we had Hindustan Unilever talk about the fact that the rural economy is starting to improve. We have Pidilite going on as we speak. We are seeing that there are some green shoots of recovery there on the rural side, and keeping that in mind, the FMCG consumption plays which are focused on rural will start to do well. So we do like that sector. Even consumer durables should pick up with the recent rate cut announcements that we've seen. Hopefully it bodes well for the real estate space, and that should have a ripple effect on building materials as well. But yes, I mean, given that real estate and building materials is far more volatile, I think it will take some more time before they start to come into the fore.
Well, we recently saw RBI cutting rate and interest rate cut on BPS. After 5 years, it has been a good boost. And as experts say, now I want to ask what kind of second order effects can be seen.
No, I think, like I mentioned, that real estate is probably one of the prime beneficiaries from it. While, pound for pound, the sector has done extremely well over the last 2-3 years, and that's why it's shaved off quite a bit of the gains in the last 2 months. But now stocks have come back to reasonable levels. I won't say they are still very, very attractive, but I think levels have definitely become reasonable. So to my mind, stocks that have reasonable visibility or strong visibility for the next 2-3 years and a good order book with pre-sales becoming stronger and stronger quarter after quarter should benefit. And the step down effect to that is, sectors like tiles, ply, cables and wires, home decor in general, that should do well.
My next question is on earnings season in third quarter. We have seen the results of many companies. Where are we currently standing, Mr. Diwan?
I mean, well, obviously there have been ups and downs in the sector, or in across sectors really. I think while I should really say that it's not that it's been a bad earnings season has been all right, but expectations that were set were actually extremely high, so it has disappointed on in terms of expectations that were set. I think some semblance is coming back in, and people have tempered down their expectations going forward. So this earnings season was a little bit of a changer of expectation, or a reset of expectations. So going forward into the next earnings season, I think you will have mellow expectations, and if we can do better there, I think that should set the tone, for the rest of the year.
And where is the froth in the markets now? Now, is it over or is it still there? And any value emerging?
I think, I don't say that the froth is settled. It's definitely coming off, and we are coming back to reasonable levels, like I mentioned earlier as well. But we're still midway through that process. So I wouldn't say it's over, and we should start, buying immediately. I think, like I said, it is in certain sectors, it's definitely sort of come off, but in a few sectors it's still there, and we are in the process of seeing some of that shave off as we go ahead. You will see pockets of growth emerging, and pockets of stocks which will start to look very attractive in the next few weeks, months, and that's so yeah, it's good to get your shopping list ready.
And let's talk about the conference now. What are the expectations from the conference as it comes in the 20th year?
So the endeavor every year has been to make this bigger and better, and this is our 20th year. It's been a fantastic 20-year journey. We've always been strong proponents of the India story, and have tried to sort of showcase it in the best way possible. This year also we have about 180 plus companies that will be spread over 3 days. We have 12 very interesting main tracks where we have promoters and CEOs of large companies like Lever, Pidilite, Mahindra and Mahindra that will be participating. And all in all, we're looking at almost 1,000 investors attending over this 3-day event. So it promises to be a very, very big one, and hopefully a successful one, which I will know by the end of these 3 days. But yeah, we're very enthused about it, and I think it'll be a great place for people to sort of get a sense on the way forward in India, and sort of build out their expectations for the rest of the year.
Well, thank you, Mr. Diwan, for giving this perspective on these all economic issues. And now, Meta is expanding its